Good morning, traders. Russell Sandiford here for your morning market rant for Tuesday. Big moves yesterday on a reasonably or almost dead calendar data day for a Monday to kick us off. But the obvious theme, I don't think some other analysts suggesting the risk-on tone is completely true. I think it was more about what we spoke of here yesterday, which was a US dollar move. If it was a risk-on move, the Aussie would have gone up, not down. So again, I think yesterday was definitely just a very big flurry back into the US dollars. I did see another analyst report this morning talking about the hurricane having an effect on that. I think that's complete rubbish as well. This is more positioning leading into the headline US CPI on Thursday. Now, the chart on screen is a 4-hour dollar yen. Never is it more evident when a rush to US dollars is going on in the market than what we see playing out in the dollar yen pair. That move from lows on Friday around 107.30 gapped higher and just kept going. Now, that was a trade suggestion for all of our VIP clients here. We give general updates all the time to keep these guys sharp with what's happening and what's driving the markets. Yesterday was definitely about the US dollar bullish strength. Now, the top ways to play that, of course, were to get long into that dollar yen move, but also to roll out or look to hedge the gold positions, because that did get back to this 13.27 level that it's at the moment, or 29 actually. But where to today? Now, look, I did notice a pattern. I just want to jump here to the sterling. That's the sterling against the greenback. That's your 4-hour chart. I did notice a pattern that the cable did come back a little yesterday in relation to that US dollar strength, but it probably was the least vibrant in terms of getting back, last week's gains. What does that mean in English? That means that the market knows we're staring down the barrel of today's key event is the CPI for the UK. Now, what I'm trying to point out is a pattern I've noticed is the market is obviously trying to tell us that we're not quite ready to sell the sterling here. Because of the caution that's been noted, money stayed on the sidelines or not sold sterling like every other major pair to get into US dollars. That's why you'll see on this 4-hour GBP chart that it's pretty much held that 31.75 level. Now, when I wrote yesterday's analysis, which is still on the website at easymarkets.com.au, you'll notice that the cable was around the same level. So that's a pretty important thing to point out. You don't want to go racing into this one short thinking the US dollar bulls will win the day, because again, we still aren't perfectly sure the US are about to move rates. Now, come Friday, we may be a lot clearer, because if that inflation number for the US is great, then away we go. The US dollar bulls will win. But before that happens again, guys, remember on the just after the London Open today is the UK inflation, and if that is solid, that's why I'm taking a bit of caution with this pair. Now, where you may not need to take as much caution is on the pairs that I highlighted yesterday for all of my VIP clients, which is the euro back under 120, beautifully moving back to 119.60. I think there's more in that potentially as the US dollar continues to firm up. And the Aussie back to 80. From where we saw that yesterday when I made that call, it was around 80.60. So it's not gone screaming lower, but the Aussie has had a lot of strength behind it, and that's displayed by the fact that it probably only moved 30 or 40, where other pairs like dollar yen moved a great deal more. So look, that has potentially just pulled back into the buy zone again. I think we are looking at dollar yen this week, thinking about 110 with inflation coming at the end of the week. But if you want a better update, a full update tomorrow, there's also a live trading webinar and events happening all over the place here at Easy Markets. So if you need a hand, just reach out and we'll point you in the right direction.